A brand new week is about to kick off right here behind me at the New York Stock Exchange. And U.S. stocks, well, let's just put it this way. After coming off a very volatile week, stocks are now looking as to whether or not we will see more of the same, because last week, one for the record books in terms of volatility. The markets, they were challenged by the debt ceiling debacle the entire week. Investors keeping a close eye on Washington, D.C. to see whether or not Congress would reach a short-term agreement to raise the U.S. debt ceiling from October 18th until mid-December. Lots of talking took place. The markets continued to take a hit. And then on Thursday, Washington finally reaching a deal to raise the debt ceiling until December 3rd. But then came Friday and the monthly employment report here in the United States, and that was an interesting number. The headline number was a major disappointment. This as the U.S. economy added just 194,000 jobs in September, well below expectations of 500,000. Markets obviously in shock early on, but then came a sudden boost in the form of the U.S. unemployment rate, which fell to a much lower than forecast 4.8%. That's the same level last seen in 2016. And with investors focused on the debt ceiling and unemployment numbers, Wall Street did all it could to make sure it was a positive week all across the board. And now it's time to look ahead. Will we see more of the same? Keep in mind, Wall Street preparing for the third quarter earnings season this week. So let's now take a look at what will likely move the markets in the week ahead. Now we kick off the week on Monday. Yes, this Monday, and it's a bit of a slow start. It's a bit quiet because there's two major holidays going on: Canadian Thanksgiving and U.S. Columbus Day holidays. But even though it's Columbus Day in the U.S., the New York Stock Exchange will be in operation. So we really start the week off on Tuesday, and it begins in the United Kingdom. August 3M ILO unemployment awaits. Expectations call for a rate of 4.5% from 4.6%. While over in Europe, we will have the release of both German and EU economic sentiment for the month of October. Now, Wednesday sees us return to the United Kingdom with British August manufacturing and industrial production figures, but also we'll see the release of British August GDP, that of which is expected at 0.5% month over month. Then it's all about consumer prices, first out of Germany and then out of the United States. U.S. consumer prices for September, excluding food and energy, expected at 0.2%. In addition, we will also see the release of the FOMC minutes in afternoon hours. Thursday kicks off with more consumer price reads, but this time out of China. Chinese September consumer prices, they're expected at a rate of 0.3% month over month and 0.9% year over year. In addition, U.S. weekly jobless claims await, and so does the September Producer Price Index. That's expected at 7.1%, excluding food and energy. And then Friday sees all focus on the United States with September import prices, September export prices, and retail sales figures. September retail sales expected at negative 0.2% month over month. Keep in mind, U.S. earnings season kicks off the week Wednesday, to be precise, Wednesday the 13th. So expect a lot of market movements on those numbers. And until next week, live from the New York Stock Exchange, I'm James Swinney, reporting for ICF.